Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everybody. Hope you all have a wonderful weekend. I think we have possibly a wet weekend here in Southern California. We've been getting a lot of rain over the past week, 2 weeks here. Today is Friday, March 25th, and some of the news coming up here. We'll take a look at the economic news. We'll start with the GDP revision. I believe this is the last one for the fourth quarter, and it came in at 3.1, a little higher than what the previous one, so it's pretty good news. And then we also got the consumer sentiment, which came in at expectation at 67.5, so it's a drop from the prior month's consumer sentiment. And then we had the technicals, or the prior reporting of consumer sentiment. Stock market's up a little bit today. There was a comment made by Fed member Lockhart regards to headline inflation, basically stating that the Fed has no control of the short term of the headline inflation. They can only control the core. What that means is that the food and energy can create volatility, even though gas prices are up, food prices are up due to oil, energy prices are up. He believes this is all to be a short-term effect, and over time will kind of subside a bit. So that's why they look at the core, but they don't have any direct control over the short term of this effect. That was kind of his point. Now back to Europe, as we had discussed earlier this week, Portugal is going to have their austerity measure vote, and it failed. So as a result, the leader went ahead and resigned from this. So they're kind of serious trouble, basically going down the road of a bailout. So with this possible bailout, now there's a lot more focus towards Spain, which they also have been mentioned as a possible bailout, which if that happens, this will be the largest of all the European bailouts when they have basically a $1.5 trillion economy over there. So it's a pretty large one. The issue over here is pretty serious over there. What's going on is that you got people like Ireland, you got Greece, then you got Portugal, and then even Spain. Basically, the government, are always borrowing money, which is through the use of bonds. And then what's going on, because the investors don't have much trust or much faith in their government being able to repay those loans, so they keep raising the interest rates. And because they're paying higher interest rates on that debt, it's harder for them to get out of anything, and it's getting more costly. So this is what's kind of going on. It's kind of like a double-edged sword that's going on in Europe with this debt crisis over here. U.S. is drawing a lot of debt, but we're not paying as much. These guys are almost paying double digits when it comes to be able to get money from investors to be able to support what's going on there, based their social benefits and everything else down the line there, and infrastructure, and keep the government running. So onwards, upwards. We'll start off with I'll finish up here with Japan. The number 3 reactor is still basically in the grave and serious condition here. So that's the main news that we're hearing. They kind of think that this is probably the one that's creating the high levels of radiation over the last day or so. Is the number 3 reactor. So we'll definitely keep monitor of this here. So let's take a look here at the bond market and see how the mortgage rates are doing. As we saw, we had a little bit of a last minute drop, so it's kind of we were kind of hanging around -3 yesterday, and then it just kind of dropped to -12. We did have a slight upward start off, and right now we're up +9, so it looks like we're above the 101.80 mark, which I was hoping we would hold, but yesterday we were pretty much right around just hair under that, so it's kind of see it going upward trend. A little bit. We'll probably see a sideways pattern here for a little bit, and then probably gain enough steam to go back upwards a bit here before we can gain a little bit more. Especially with all the different crises going on around the world, that should be enough incentive for bond market to be kind of showing a rally. So interest rates are probably slightly better or about the same as yesterday, depending on if you had price changes from yesterday. So about this, I would say probably closer about the same as yesterday. As we can see, we started the day off here. We didn't really have any price changes for the worse yesterday because there's only 12 basis points. And then we start up down here, we end up here. So we're about where most people are going to start price will be about the same. So probably about interest rates are about the same today. And if we can get a nice little rally, that'd be nice. But I would expect probably a sideways movement between 101.80 and 102 here. All right, folks, have a wonderful weekend, and catch up with you on Monday.